Alrighty, hello everyone, Richard here and welcome to Wednesday's Morning Bell. Right guys, the big day is here. Fed's rate decision, 2 p.m. EST. What are they going to do? Everyone's expecting a 75 basis point hike. Some saying maybe 100 basis points. Who knows, maybe they won't hike it that much. Whatever the case might be, probably going to see a lot of volatility right into that sort of time frame, 2 p.m. EST, maybe for the remainder of the day. The indices we're following have been trading in sideways choppy ranges for a while now, or should I say since Wednesday's last session. So let's quickly have a look at the markets. Not really much has changed. Like I said, a lot of choppiness in the markets. The ES try to break through the 3,816.75, again plus minus level that we identified, what was that, on Monday already, which is basically just this low median line of a downward sloping pitchfork that's contained price pretty well during this entire decline that started in Jan on the ES. Alright, so that's been acting as support. So yeah, who knows? Are we going to see a move to the upside? Are we going to run sideways? Market factor in the 75 basis point, whatever it might be, and it's non-event volatility wise, or we're going to see another strong decline. Again, in the bigger picture, just looking at the price structure, I still think that there's a possibility that we can go lower. Whether that happens today, tomorrow, or next week, we'll have just to wait and see. But I do expect, from my analysis side, with my opinion obviously, which you shouldn't take as investment advice by the way, that we're potentially still seeing, or are still seeing, an incomplete downward move for a WXY, basically called a double zigzag. So that would then, in my opinion, complete a complex corrective pattern. We thought that a corrective pattern ended here in June. We had a very strong move to the upside. We expected 5 waves. We didn't get 5 waves, and we've seen a very strong decline to the downside again, right? So you see I got a little diagram over here, which is an expanding triangle. We've actually had a really big expanding triangle over here. Let me just get rid of these MACD lines quickly. With an A, a B, a C, a D, and an E, ending abruptly, expanding triangles, very volatile patterns. So very large one over here, and they are labeled 5 waves, A, B, C, D, E, before they end, and then price moves to the upside. Obviously this is now in a bullish scenario. Reason why I'm showing you that here or there historically is that if we look at the 4-hour chart, while price has been testing this lower median line, let me switch time frame quickly. We might be seeing an expanding triangle taking shape right at this area that we identified previously. We also have momentum divergence right at that lower median line on the 4-hour time frame. Now whether this will hold, we'll see a bounce to the upside. Again, anything can happen with today's rate decision, so it's very difficult to say, but one thing we did get right here at least was that markets could probably hold the support area, which it did for quite a while. So that expanding triangle that I've shown you on the bigger time frame, there might be a possibility that we're seeing one here as well. Especially if you notice that when price first hit this lower median line, it went up, went down, went up, went down. So it's almost like it's fluctuating up and down, making higher highs and higher lows. In this case, lower lows, lower lows. We could here potentially be seeing, and this will be a very fitting pattern, if I can say that, for how markets tend to behave, a volatile pattern, should I say, especially leading into today's rate decision. So potentially could be seeing an A, a B, a C, a D, and maybe an E wave. All right, so let me label that out for you. Pretty wide. Markets are trying to push up currently. Again, no idea how we're gonna react or how the market's gonna react when that rate decision is released. Potential A, potential B, C, D, potential E. If this turns out correct, then we could potentially see a break above. Oops, your snap mode on. Where's the highest point? This bar over here. 3,936. These things can get very volatile, so it's quite often that they'll can reach these trend lines or overshoot them, or maybe just reach in line with them and then see a reversal to the downside. Otherwise, if this doesn't turn right, then I'm just completely wrong, and whatever happens, happens, right? It does look like we have this up and down fluctuation around a center point, which is probably around about here, where we had a little high over there, highs, 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 resistance, right, breaking above it again. So yeah, potentially could see another move to the upside, but this appearing in a downtrend, in my opinion, could still be seen as bearish. So when an E wave then ends, we could then see around here or even higher another decline. Let me get that snap mode off again. Sorry about that. Another strong decline, right? So yeah, interesting, guys. I mean, that's the only pattern I'm really seeing here today. Let me just adjust this lower level a little bit here. Price still bouncing around this low median line below current price, currently around 3,854 and 3/4. All right, so yeah, we'll just have to wait and see. But again, in the bigger picture, I do think that we could potentially move lower. Whether that happens sooner rather than later, we don't know. All right, so if we do get a sharp move to the upside, then I think these previous highs will be tested, 3,936. Potentially higher than that would then again be a market geometry level, which is this downward sloping median line here. Potential resistance currently at 3,996.5 plus minus. All right. So that concludes the ES. Let's quickly have a look at NASDAQ NQ. Guys, if you've got any questions, please let me know in the chat box, and I'll be more than happy to answer them for you guys. All right. Sorry, I'm just checking the chat boxes there, guys. All right. Let's just go back to the daily time frame on the NQ. A little bit different price structure than the ES, right? Although same sort of price behavior, identified a very strong resistance area previously. We had confluence of multiple market geometry lines. Price reached that on NQ, bam, went down. Again, we expected some sort of support step in here. That didn't happen. We didn't get a nice 5-wave move to the upside. That would have been nice to confirm that this was potentially the end of a corrective move around the same time frame as the ES. But boom, straight down, right? Pulled back into it again. Its price on the NQ has been respecting these median lines that I have on my charts for a very long time, and is still continuing to do so. All right, so here we mentioned that if price hits this lower median line, this one sloping to the downside, we potentially could see a bounce higher or sideways movement, support, whatever you want to call it. We have momentum divergence between a low and the low that materialized on the 16th. That's now on the daily. Price perfectly touched this low median line and since been running sideways. Let's go to the 4 hour. You'll see that because we changed time frames, the market geometry anchor points changed slightly. So we did draw that on the daily. This lower level was reached because the line that's labeled here didn't move. It should be about here on the daily, but in any case, slight momentum divergence, bullish divergence into that low on a 4 hour as well. Previously we had that at that area, price hit that center median line and a straight drop downwards happened. Also within that zone we identified. Here though, on the other hand, it doesn't look like we might have the same pattern that we potentially identified on the ES. This just looks like a 3-wave move currently. 1, 2, 3, and that's probably, if that is it, potentially we could be seeing a 1, 2, 3, 4, 5. But that expanding triangle, if it works out that price goes high in the ES, obviously the NQ will follow. Then the alternative pattern that we could be seeing here, if it is corrective, is an A, B, C, W, X, potentially another A, B, C for a Y. So WXY pattern, basically 2 zigzags conjoined by WX axis. So that is if price obviously moves higher today. Let's get a pitchfork going here. I like, if this is the scenario, to draw a pitchfork over the WX axis. And as always, like using the shift pitchfork setting. You just get rid of that, and you can already see that price, by using those 3 anchor points, the start of what I'm potentially thinking is a corrective move to the upside, to that high and this potential high low. Obviously this won't be a higher low because it's not confirmed yet. It will only be confirmed if it breaks these previous highs of yesterday, right? So those highs currently at, is that the highest high in there? Yeah, it is. 12,092.5 on the NQ. Price now struggling to get through the center median line once or twice. A break above there, we could potentially see a move back into there. But then take note that we might only be seeing an ABC wave to the upside. Unless, of course, some reasons, oh, I shouldn't, that's not the right anchor point. That's the one I should use. Apologize. We start just seeing one hell of a move to the upside. Then something else is going on. Potentially a 5-wave move of a leading diagonal, or first wave of an A wave followed by B and C at a later stage. So again, guys, I'm probably just faffing around here. It's like, if this is corrective, that's all I really can say. These are the targets to the upside. We might just see a collapse today to the downside. So, and again, if we do see price break below these lows and as well as on the ES, then I think there's very high probability that price will go even much lower than the June lows, and potentially follow that WXY structure, incomplete WXY structure that I've been seeing on the ES. Okay, how are we doing for time? All right, 15 minutes in. Let's have a look at crude oil, and then we'll look at gold, and we'll call it a day. Well, on the analysis side of things, obviously, I'll be watching that news event very closely from my side. I'm very interested to see what's going to happen. Let's move to the daily here. Divergence is off. Again, we've had these channels sloping to the upside since price went, and this is crude oil now, negative in April of 2020. And they've been finding or containing price action really well, especially when price reached these highs and failed to break through them. Even to the downside, price respected these angular lines. Broke below it, pulled back to it, respected. Respect a little bit below, pulled up, and it's also been following a pitchfork that was drawn from that high to this low to this lower high. Then we were saying that potentially price was going to reach these lows that were set in April and in March this year, which it eventually did, although it happened extremely slowly in a very, very messy price pattern. So we were thinking that two things are happening here, potentially an A, a B, and a C wave, meaning that at some stage potentially going to see another strong move back to the upside. So if this was the case, or still is the case, then we potentially could be nearing the end of a C wave, where the C wave could potentially, and this is why I'm thinking with this crazy price action we're seeing here, be some sort of an ending diagonal C wave. Although it doesn't, it looks really messy, right? Price moving up and below these angled lines, not really well contained within the ending diagonal sort of shape of a pattern. Or we've had a 1, a 2, and we're building lower in 5 waves for a 1 of a third. Oh, and I don't know why it's labeling it like this now. Maybe I should open the chart or minimize it a little bit. Let me do that again. I do apologize. Maybe a 1, a 2, 3, 4, 5. Price moving way lower. Obviously, forget about these lower target projections where I put these labels. I'm just trying to show you the chart structure here. It does look like we have this 3-wave movement behavior all the way to the downside. I think it might not be done yet. It could be here on the 8th of this month, and we could see a sizable move back to the upside. But what that would mean in my scenario of this third wave, that this was only the first wave of this third wave. This one over here, if that makes sense. Those are familiar with Elliott wave. So that will obviously be great for us because it's going to be cheap at the petrol pump, or the gas pump as you guys call it in America. But yeah, who knows? I mean, it's been so messy down to the downside here. This entire correction might still, I think, be a 4th wave correction. All right, so over the near term, we've called levels last week. Price failed to break through that, acted as resistance. All it was basically a lower 50% dash median line, this dashed one over here. Price couldn't get through it and moved lower. Nearly broke below the lows that was set on the 8th of September again, sorry. So that same level above current price is currently lying at 87.64-ish. We also have this center line of a channel that's previously and for a very long time been acting as support and resistance. Above current price today, that level is about 91.48. If this is the end of the 5th wave here instead, then we could see a much higher move to the upside. Okay. If price is still going to move lower into this lower area because it's not touched the low median line, this green line yet, or the lower channel line of that long-term channel I've drawn, then price could potentially end that move around 78.69 to the upper side of the zone, towards the lower side at 76.83, give or take. So just be aware of those levels, and that might be the case where we could see a bounce higher. I do think though that we've seen already one move up here. We potentially made a higher low right here, and we're going to get a partner leg for this move to the upside, potentially reaching that line again, and then maybe get that last 5th wave move to the upside. Right, so those are the levels to be aware of, whatever your strategy might be. Beware of resistance, 87, 67, 65-ish, around about there. up from there at 91.48. And if we do break these lows, especially this one set on the 19th, 2 days ago, then I think we got a good chance to see crude oil break the previous lows at 80.72 and then finally make it into this potential support zone we identified.